All your banks are FTX, just a bigger version that are being held it up for now. We should all be in cash and we all should have physical precious metals. That is good. It feels right. It's a kilo. And guess what? You got to come and get it.
Please join us for our next live stream Sunday, November 20th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, November 20th, 9 p.m. Eastern. See you then. Francis Hunt, the market sniper, joins us today. Francis is a trader, first and foremost, and one that I will say absolutely understands physical gold and silver. Francis has over 30 years of experience in trading and has derived the Hunt Volatility Funnel Trading Methodology, a systemized approach that answers the key question, what is the next most profitable trade? And we're delighted to have Francis join us here today. It's time to saddle up and silver up for Francis Hunt. Francis, welcome to SBTV. How are you doing?
Patrick, always great to be back with you. Thank you for inviting.
Glad to have you back on, Francis. Appreciate it. Recently, we saw gold and silver catching a bid. What do you attribute to the rise in price, and will it hold?
It's very good questions. So you'll probably know from our previous interviews, we were one of the earliest to suggest dollar dominance, and we're a bit cautious about the paper price for both gold and silver leading into the bullish. And we said we had a target in and around the 111s for the dollar index. The dollar went up from 87 and then broke a key level at 94.5. That was a technical pattern. We can revisit those charts in a second, but it's worth just recapping. And then it went for our target of 111. And it, as is typical with targets, you usually get a final blow off. So you run the 111, and in actual fact, I'll actually need to check to make sure I've got my facts straight. But it had a technical exhaustive high in and around well through that, which is typical of a blow off event well through that at around 114. So our 111 targets were run. Then we pulled back and we started. It was less of a one-way train for the dollar, and that has kind of seen, as you're probably aware, with all the news on FTX, Bitcoin has been in a range trade. A lot of things were in a range. Initially, gold and silver had sold off, but then they started to just chop and churn at a level. It didn't get any worse. And the data that came in last week, which was on CPI, which was the first meaningful undershoot of expectations, was incredibly undermining for the dollar and very bullish supportive for equities, crypto, gold, silver, the whole shooting match. So whilst we can look at some of these things as being specific to an industry, and we can look at relative strengths, who went up more or not. At the moment, we actually had a very monopolo world. It was, what's the dollar going to do? Is if it's dominating and running, most things are feeling a fair amount of pressure. When it run that target and it was churning, everything else was treading water and chopping a little bit. And now it's spilt quite dramatically with quite high momentum. So don't forget, I think we got down to, even on its lowest day, 96 American cents to a euro. Now you've gone back up to 104. So we're dancing around that parity with 400 points either side thereof. Technically, this still doesn't look particularly amazing. The momentum of here is great because the dollar's died hard. That's positive for now. I would love for it to turn into something a lot bigger. But actually, the technical patterns we have in gold is a double top still with a neckline, and this could just be a rally throwing the bears off the scent that could have a paper price drop quite significantly. That doesn't mean because you have the possibility that it absolutely will happen, but there could be some real demand killing events. Silver as well, it surrendered a key level that is 22 for us. So I know a lot of silver fans, including myself. Lots of technical support of the 22 coming up to it there. Double timing, third and fourth even, and then we broke with momentum. We rallied into and we died down. So that was real pain. Now we have a bit of a technical reversal, but we're back up at the 22 level. Unfortunately, what's previously been support can be a little bit technically resistant. So we'll see. We'll see how far, and if it gets back above, how strong. But this technical structure, is a bit of a broadening event. I only start to get excited when we get above this capping descending line. That is part of a very large megaphone. So overall, paper prices are in the short term getting a relief rally. Does that mean all aspects and downside risks to the paper prices are all done and we're in the mega bull? Not for me.
If you're enjoying this interview with Francis Hunt and I, please do consider subscribing to our YouTube channel and let the algos know you want to see more content like this. And if you'd like to learn more about systemic wealth protection, please do visit us at www.silverbullion.com.sg. And the other metal, platinum, we've been watching it pretty close and it has been gaining some ground on gold. What's your take on platinum?
Yes. So first of all, the story on platinum is very much that the lead up story, the big story. So if we go again to monthlies and weeklies, is that it's been an underperformer of a very, very rare precious metal that has very unique properties, and did also not so long ago break out of a falling wedge structure that I'll slightly refine here on the jaw. Popped out, but then got brought back down and again. And this move, remember, this is a monthly chart. Those three candles are months. So when you drop in a weekly, you can see breaking this capping descending grind line is very, very positive. The most interesting charts for me are the ones where we do platinum versus the others. So if you do platinum and you divide it by gold, what I've noticed is because it's so underperformed, you may get a bit of an underperformance benefit on it because it is indeed very unique metal. I think it's approximately 30 times, maybe 35 times rarer than gold. And it's not monetized to the same level. It has an industrial use, but it is also used for jewelry, and it is known to be precious. And actually, most of my precious metals career, it was the more expensive metal. So the interesting part about this, if I just carve up this chart for you, is you can see your secular decline in relative valuation. So what are we looking at to help people understand what we're looking at? We're looking at 1 platinum ounce specified in gold. So, near the highs, given this rarity, near the highs, you needed 2.4 gold ounces at one point. And it wasn't so long ago, 2008, and again in and around the 2000s. And it's always been, for me, usually about 30%, 25% more expensive than gold in my career. And it's more recently that fell away. But palladium had a huge run, which is now looking very overcooked. So palladium's a lot softer, and palladium was replacing the industrial use of platinum. So what happened is you had a final capitulation out of this squeezing wedge. So when you get compression in a pattern like a falling wedge or a symmetrical triangle or what we call a Hunt volatility funnel setup, you get an asymmetric reward trade. It was interesting to hear Stanley Druckenmiller talk about events when, the pound was a 40 is to 1. It was asymmetric. So they could risk X amount because they stood to gain so much. It's that asymmetry you want. When you get squeezing very, very tight, you're able to have a money management risk stop a lot closer, and you can build a view with a highly expansive, because when it does move, it moves substantially. The tricky thing with wedges is it can move in both ways, whilst generally you can probability-based scenario cast the right direction if you're doing good trend analysis on an HVF or a symmetrical triangle. In the wedge, you can sometimes have a final capitulation before you go. And we write up theory for this. We call that a type 2, where the long-term direction is likely to be up, but there's that spill out the bottom. So the squeeze you were getting in the wedge actually broke to the downside. We all want to be bullish, but that was a very much a symbol of a very low relative valuation. You only needed 39% of a gold ounce to secure you a 30 times more valuable unique property platinum ounce, which is far less easily to find and is in the more risky countries like South Africa and Russia that is found. Now, it's also found in some Western nations as well, but it's really, really hard to get. and rare. So that final capitulation was interesting. Then you got a bump to the upside, and then you eased back again because we had that dollar strength. So platinum's had everything go wrong for it. It's the great hated in a way. And if you listen to people like Rick Rule, he loves markets of the great hated. Uranium was the great hated. Everyone was like, it's nuclear waste, it's toxic, it's all the great hated. The great hated often becomes hyper undervalued, that then leads to great value. So platinum had a push up, then a drift down. Again, it had the dollar in its face after palladium had eaten its dinner, and the whole precious metals complex. So what we're actually seeing is it's gone from being a 3.9, 39% of a gold ounce, to now being almost 60% of a gold ounce. It's still not at 1, which will happen round about there. So it's some way off, just being the equivalence of gold, which has been historically a lot less. So the question we asked is, this is showing a reluctance to continue in what it's actually been doing for the last 23 years, shedding value. And if you say, okay, but hold on, let's take it from 2008. It did come and kiss that level one more time. Okay, call us a liar for 2008. We're going into 2023. So certainly one can say, if you take it just before the worst capitulation, this was all a topping out as far as I'm concerned. But let's just say we take it from '08. You've had 12 plus another 2 going into 23, maybe 3, 15 years of absolute erosion, where you've gone from 2.4 relative value to 0.39 and are still sitting at sub a gold ounce. So the interesting part for me is, do we start get some bottoming structure here in the relative valuation? The reason why that's interesting is because I think there's going to be a paper sell-off on metals still to come before we get our mega acknowledgement of the monetary value of metals. I think the dollar is used as a wrecking ball, even though it's pausing now and very hard to destroy everything else, and then dies a death on the account of supply chain all destroyed and the rest of the world being damaged to the point that it eventually leaves it damaged too. And that's the point that the metals truly shine. And I think there's that event to still come. So the interesting thing about cross metals analysis is it allows you to play inside of the complex that should all generally do well, but get your weightings right. And that can significantly boost performance. So if, for example, your dollar costed average into platinum for an extended period now, you would probably buying the cheapest metal at the moment as a possibility. However, where are we wrong? If we were to roll over and have another, really round convex and then spill, bounce and run that legacy low, then I would say that this event, which was a squeezing, and it was a very lengthy one, and good long structural patterns rarely lie. It's real supply and demand dynamics. It's not made up by some manipulator on a given day or hour. Rarely lie. So I'd be a bit surprised, but we would accept we're wrong if we run below 39% of a gold ounce. But I would argue you start to get very interesting at the 69 level. When is that number never interesting? So you're going to get that up there. If you get back up there, you're looking at a W bottom, and you might be getting all sorts of moves to the upside, which could just take some of the pain out of any paper price, short-term paper price, and potentially get dollar cost averaging guys getting into the cheapest precious metals for the moment. So again, quite long form answer for you, but I'm hoping that gives some color as to my thoughts on it.
Francis, I appreciate everything you're saying, and I've heard a few words. You've mentioned the word paper when it comes to price. You've mentioned the word manipulation. I just want to ask you your view. You're a trader, but what are your views on maybe some elements of the markets, especially when you refer to the prices being paper, when we have people who are actually trying to buy the physical metal?
Yeah. So at the moment, we have a derivative proxy price that is based on a lot of asymmetries. I mean, just one asymmetry as an example, these bulge banks, primary dealers, can actually short as big a size as they want in the silver market, but they can't go long the same number of contracts. They're limited. So how can you short something on an unlimited basis that you're capped on going long on derivatives. So this is not a price discovery mechanism, and also the fact that it's unrestricted and is not based on real some level of collateral and ability to stand that. There should be some capping on account of how big is the balance sheet of that bank, that you get so many years or days, months, weeks of production that can be not for profit sold in hours. That points to a heavy lean on the paper price. They have to keep it somewhat there or thereabouts because otherwise people just won't sell it. But it's a very, very bullied market. I would describe it as a timid little mouse that hides in the corner of the room in terms of it's bullied and there's lots of predatory forces around it. In the same way as there's a lot of markets that have been unnaturally fluffed up and maintained and told that they are brilliant and they shine. Gilts, the golden certificate that represents debt in the United Kingdom. Well, there was a no bid market on that highly prized gold certificate, which says you're owed money by a government that's paying you a negative real rate of return to their inflation rate. Well, I'd argue that we haven't had a true price discovery mark to market for real volume. There's a little, it's almost similar, and I'm going to bring the cryptos in here because we were hard hit by these the FTX crisis, and he actually created a token, could make as many of them as he chose, and then um, buy them up to a certain valuation that implies a certain market cap, even though that level of trade that was occurring and the amount of money needed to maintain it made it more worth his while to maintain it and spend money at maintaining it at those levels, because he then had pledgeable collateral that he could pass to other trading companies that could get dollars, which themselves have also been created and is just a bigger Ponzi scheme. But let's just put that aside for now. And what actually happens is you then, it traded for that, therefore all are worth that. Well, you're not getting significant validation in volume to truly say that. If I own 99% of the shares and I get an overdraft and bid those shares up to $100 and there's a million in them, technically I'm worth 100 million by market cap. And if I can go borrow 20 or 50 million and start, speculating in the markets, it's grand. But it's not truly finance, because if someone says those aren't worth $100, I can get a short on them, but he has to at least he can't have open-ended leverage. He can just get a borrowing, we get a true price discovery, then I've got to spend a lot more money just trying to maintain that market cap. And people are going to ask fundamentally, is it truly worth what I do? What's its utility? It starts to get more attention, and frailties quickly show up. And then you have effectively a bank run. And then you also find that all other kinds of misdemeanors have been occurring. And I think there's a bit of that that has been going on in the precious metals markets. That's my take and my view. And when you look at wherever you suppress something, you do it to not make something else look bad. For example, if I slander you and your good reputation, it's almost it's almost an attempt to make imply by definition that I'm a better guy and that I don't do any of those things that I accuse you of. So where you're getting a market suppression, it's often for a reason or a motive, because it shows up somebody else or a different market for its overinflatedness. So this is always where you're not getting true price discovery. So what's being hyperinflated? And invariably I come back to the debt markets. The debt markets, you have the Japanese that are, regardless what they are, how big a savers they are, not excessive consumers, they have to import energy. Oil has been super strong. They have none of that, yet they have a Japanese rate of 0.25%. That is not a good positive savings instrument. And they are doing this purely to maintain an already over-debted and over-leveraged environment. So they don't want their debt going down. And what is the natural canary in the mine for unsound money principles? And that is silver and gold. So that has to be held down to not show up the weakness of that. So we are printing money to sustain and extend a hyper-extended, over-leveraged, hyperinflated debt market at the expense of a grossly underpriced in inflation, stagflation, and hyperstagflation, and even deflation investment such as precious metals. That's my take.
Yeah, it's a great take. You know, Francis, when you look at the Fed, the ECB, the Bank of England, Bank of Japan, and so on, how confident are you that these central banks can bring back Western economies?
It's not my assessment that these central banks can bring back these economies. They're in a you. There is nothing. There is what happens with the undermining of sound money is a lot of other things get undermined simultaneous to that. If you lose your morals in one area, it's not ring fenced. Morality, discipline goes in all areas. And what we're seeing is social undermining of the social contract. We're seeing political, absolute corruption. I think some of the events of FTX, although I have no insider's view sitting in a land far away, just with an internet connection to assert that any of them are true, are quite feasible or potentially plausible of what's gone on in your midterms. In fact, I want to just highlight there's been an inflection period here. What we've seen is the dovish inflation figures simultaneous to a midterm election where a red wave was expected and hasn't really occurred, along with a lot of question marks about FTX's involvement, funds going to Ukraine, a variety of various, all of these highlight um, absolute skullduggery potentially. That's not proven, but the allegations of absolute skullduggery and moral decline, political corruptive decline to an extreme level. And I say that goes hand in hand with the undermining of money. It starts there because money is more than just, you don't want to think of it as Richie Rich and this greed tool. It's actually a reflection of value and fairness and justice and validity and reward or penance if you're paying a fine for various things. So it is energy. It is a flow of energy from and to. It is have you added value, have you not, etc. And so flows of value which should be monetized in what we call a true money system are actually a scorecard for those that are positively contributing and active and smart, doing clever, hard work things versus those that are extracting and spending and not making a positive contribution. And what we actually see is that the extractors and the criminals are getting rewarded, and hard, honest, high value toil is not getting the same level of reward, and what they are earning in is being debased. So we actually have this inversion. So the lack of sound money, you can see within that the same skullduggery, the same dishonesty, the same insincerity in the social political, the moral codes, and so many other things. And so just go, I must actually ask you for your question again because it's quite a long form answer again, but the whole point is we are decaying at every level. And the ability to rein back a snowballing dung beetles harvest, it just doesn't rain back into anything positive. It just gets bigger. You just roll it and it keeps rolling until it's unmanageable and it's stinking up the place. And we are in what I describe as the end of empire, awaiting a Bretton Woods Mark III type moment where they will come with some new solution which will allow some of them the same license, and I fear we lose a lot of freedoms. But unfortunately, we have to sit through the extend and pretend game of this loss of morality in all things, and they aren't going to be able to rescue it. It is pursued to its final end game. You have to watch the kind of political leaders we have doing the kind of things that they're doing, the kind of TV quality and what they're promoting and pushing, and until that is played out, you don't go back to honesty and reset that clock to some degree of integrity. Not that I have confidence in what they will deliver as the new thing, but they will, on the surface level at least, pretend to revisit. The problem is they're going to allocate the blame for all the things that went wrong in a disingenuous manner, which will not highlight their large role in that and will probably suppress white males or capitalism, when in actual fact it's cronyism, when in actual fact there's all sorts of other social contract things that have gone on, and they are actually the greatest tarnishers, that category of people. And if you just look at this FTX story, which we were personally affected by, both personally at a business level, staff, and many of our community members, which we really feel bad for and about, because it was a good trading platform out of all the options available. Um, it's a certain crowd. It's a certain kind of crowd. And there seems to be relationships even with the SEC members, professors at universities, and unfortunately, these will be the people that will be pointing out who's to blame in due course. But it's actually them that are a problem. But we have to watch this game end first before we get the second edition.
A lot of great points there, Francis. You mentioned the loss of morality in governments, loss of or corruption in government, corruption in the monetary system. You mentioned the words reset, endgame. In your view, where do you think we are headed to in this endgame?
It's a very good question. And I actually see, so I have the emotional rawness and all the anger and all the usual things you would associate with personal loss, family related loss, business loss, and then community loss. But if I step back from that, I feel stupid for being caught and all of those various things. But actually, if I step back from all of that and just watch it at a macro level, the theme that I am seeing is rolling counterparty risk is far more significant than most people sitting in their chairs right now truly understand. Today, FTX and in a crypto realm, and there'll be many people who never participated in crypto and go, I don't care, it doesn't affect me, you stupid fools, you got involved in that, etc., etc. As I highlighted, crypto is just a smaller version of what is actually a globalized scam in our fiat system of undermining and debasing currency in the exact same way. And in the exact same way, they've had many more decades to be hollowing out what you think is in your pension, what you think is truly behind your bank account. And I saw how it went when I watched the account. You couldn't withdraw, but there were still amounts of money in it. You could actually still trade and do various things. And then a day later, I said to my partner, soon you will not be able to log in, or the amounts they will take away. And then there was another stage, the websites got largely nullified. Now you can log in and all you get is a hanging thing. Now imagine that on Western banks. Imagine the blowback scale, and imagine the power it gives the people bringing the new money system to have everybody impoverished so that they have to sign on the dotted line for whatever terms and conditions are put in front of them, especially if they've captured supply chain. They've hollowed out your wealth. The great leveling. This counterparty risk is one example at a very, we feel it's huge in crypto, and everybody's saying how damaging it is, it's bigger than Mount Gox, etc. But the truth is, in terms of the macro financial system, this could be a very tiny domino that brings a lot of other dominoes, or even separately has its other events will lead to a beginning of a daisy chain of falling that will see banks fail. Don't forget that news article that saw the better part of about 28 trillion sent to, I think, a handful of European and American banks by the Fed. This is patching up derivative failure. We get occasionally to see the boogeyman in the trees as he moves between one tree and another. You see a flash. Those articles have been suppressed. I can't even find them anymore because the numbers there were astronomical. They're happy to tell you about 1 billion lost there and 30 billion sent to Ukraine. Sending to an offshore bank that is not even in your country 2.8 trillion to the likes of Credit Suisse and Deutsche Bank and all of that. Why is it central bank in America? Trillions, 1,000 billion, multiple thousand billions. That's next order of level. Why are they doing that? Because there's clearly derivative bombs that are blowing up, and they need margin and they need rules and they need to be held together until this controlled demolition of the financial system gets the red flag that every single charge is in place on every support pillar, and they are ready for a numerologically significant day to say, and today be the day that these things happen, and start a contagion of events that will see implosions, implosions, and collapse. And that's my overall take. The financial system that you've had for 40 years that you've trusted one day won't be there. Just like I sat and watched my digits in a displayed on a website exist. I could move them inside the site, but couldn't withdraw them. That was stage one of my loss, and then predictably watched no longer any numbers exist in there. And they gave you a throw out now to, oh, there was a separate hack and a separate this nonsense. The money was lost long ago. The money was lost when he took all the clients' money and gave it to a hedge fund to speculate, and went into a fractional reserve banking system where he actually only had a certain amount of money, and providing enough people were putting in and depositing and not everybody was coming in, he could just about maintain. And I think this started actually way back at Three Arrows, at the crypto event, when all of those guys started to fall. But he was trying to save some of them and doing loans and various other things. So he was probably technically insolvent 6 months ago, which is why he was telling everybody how insolvent other exchanges are. So one tends to project onto others what one is most guilty of. If a husband keeps coming home and accusing his wife of cheating, he's probably cheating. This is the law of preemptive inoculation against that you accuse others of. It's disingenuous for them to say, maybe you're doing that. It just sounds like someone who goes, yeah, you too. So they automatically misdirect people from thinking that there's anything wrong with them, and they look like the good guy, the cop on the beat that's pointing out the bad guys. The baddest guy is the guy that pretends to be the cop. All these altruistic, there was another theme that came out of this. So we're spending a bit of time discussing an event, but I'm more talking about the psychology and the manner. You as a participant, you and I, all of us watching and listening to this, are all participants in the macro, which includes banks. And I'm saying to you, all your banks are FTX, just a bigger version that are being held up and have a bigger support Ponzi team behind them for now. But they all know that it's gone too far. They all know they want to take it down, and they all know they want to set the clock again. That's why there's big organizations for reset. So when you begin with the end in mind, it's easier to see what has to happen. And they've already seeded quite clearly where they intend to take you with the CBDCs and the surveillance finance and the loss of freedom that you will have. We should all be in cash. We should have lots of cash notes, not because it's a good investment, but because we should pay in cash and transact in cash and keep a lot of it. Because if the banks go dark, at least it will still be legal tender and you'll be able to transact. And we all should have physical precious metals. Anything you can't hold, and we're into this. The other problem I have with crypto, for example, and many of the Bitcoin maxis have seized this moment to highlight, actually, we good, that was them. You were using centralized exchanges. You shouldn't be doing that. Not your keys, not your coins, all of this. So you've had Michael Saylor and a lot of people that called gold an old wooden boat and Bitcoin the new pristine battleship with the metal hull and the next level technology. What we've done is we've created and orchestrated and engineered a digitized scarcity. And that is just by decree and a sweep of a pen. Someone has said there will only be 21 million of these. Well, I could start a token and say there's only going to be 21 million. We could have 21 million tokens all with decree, where they say, well, this was the first, this did this, this did that. We have this mystical persons that's disappeared. This is a digitized secure. It could be hacked, it can be broken. It has many frailties and flaws that physical doesn't. The fact that one is wood, sometimes it's better to have wood as a substance, maybe not as a ship, but wood is a better use case for certain things than steel would be, especially if you're dealing with heat. For example, you're going to get your hand burnt. So the notion that everything has just moved forward and is better at every level and is a battleship made of steel versus an old wooden Almeida, Spanish Almeida ship that's comparable that Michael Saylor will price out, is a little bit very good when you're using the shipping analogy, not so good when you want to start a fire or have something that you want to burn. And the digitization of everything and the internet is part of our entrapment. That which you hold will be that which you own. When the power takedown, the mobile takedown, the internet takedown, if those things were to occur, which I'm not saying they will, they might occur in part, they might not occur in certain countries only. Um, and you have that back to the basic level of functioning while we go through problem, reaction, solution phase, you won't own anything that you don't touch. And right now, having lost a lot of money, I still own my watches I own, I still own the car, and I still own my gold. I don't own any crypto. I don't own those stable coins I had. I don't own anything. And someone was able to steal from me. He didn't have to come to my house with a gun to do it. Make him come to your house with a gun to steal from you. Make it difficult. And then don't necessarily have it under your bed. Maybe somewhere nearby, but somewhere else. So these, I think, tangibility of wealth and physical retained wealth for this great leveling. What do they want to do? If they want to introduce a very lockstep Rockefeller based agenda that is very dominant and aggressive and reduces citizenry to submissive church mouse running from predatory cats, what do you have to do? You have to do the exact opposite of where they're trying to steer us. They steer us into banking, they steer us into metaverse, they steer us into virtual this, virtual that, buy land in the sky. And they create scarcity. There's only so many continents you can buy. And buy NFTs, there's only going to be X amount of PDFs of a monkey picture, etc., etc. This is trying to establish a value system on vaporware, absolute vaporware, because they say so, because some captured celebrity thinks that cool monkey picture is so worth 100 Ethereum or whatever the case may be. And let me tell you, don't deal in art unless you really know your art. Don't deal in vintage wines unless you really know it. And those things are physical. Taking that digital, this is vaporware. This is a real problem. And find out now how those NFTs are trading. They're awful. So there's a lot of distortion to value systems. Something you hold, something you own. In fact, I love it. Feels good. It's natural. It's heavy. It's come in cardboard. It's nicely packaged. I say it's got its condom on, so you can't even put your grubby mitts directly in it. It's wrapped in it. That is good. It feels right. It's a kilo. And guess what? You got to come and get it. You got to come and get it from me. I know what it is. I know what it costs to get out. I know how expensive the energy and the diesel that is required. And diesel is in shortage, as we know. We've been hearing a lot of information. The ships that bring it in are all charging up to $80,000 a day if you're going in the Black Sea area. It's never been a better business to be bringing diesel. There's a lot of shortage, and caterpillars run on them, and you need caterpillars. You need Komatsu. You need earth-moving equipment if you want to get a block of this. And I like this. So the energy is going to go up. The inflation is high. This price will end up responding, and we will get that. But we've got to get around the financialization of everything that is perverting true price discovery systems. We have a financialization of everything. The worst nations to be hit in this period are going to be the highly leveraged financialization of everything. Britain gave up their manufacturing. They don't pull coal out the ground anymore. They don't do anything. Guess what? They need all those things, and lawyers and derivative traders in the city of London, when this whole thing falls on its face, are going to be about as useful as homeless people in terms of economic contribution when you go down to a separate layer of needs. You need food, energy, and shelter. And I think that's the step. We're going to take a step back in this cycle, and you own it if you hold it. Possession, as my father used to say, is 90% of the law. I'm pretty sure he got it from somewhere. But again, that's a couple of principles that I would suggest people apply when they are going max metaverse, go max practical and physical.
Francis Hunt, we definitely appreciate the passion. I think a lot of viewers here they will absolutely respect that. Before we wrap up, you've gave us a lot to chew on, Francis. Appreciate that. Before we wrap up, can you tell us a bit about the services at the Market Sniper and, of course, the Hunt Volatility Funnel?
Yeah, very kind. Yes. So thankfully, we have a very loyal and very patient community. And as I've already admitted, we've admitted to a mistake, but we've done exceedingly well out of trading the crypto markets. So in some ways, it has paid for itself. Um, we are technical chartists, so we assess that the only truth that you get around things is what people do with their money and the interactions that leaves, which are the footprints in the sand, the chart, rather than what they say. And most markets, you will get patterns and the ability to get occasional asymmetric rewards. Being in all day, every day on an intraday basis is not something we have interest in doing. And in fact, sometimes some people who are just investors just want to know when to buy us heavy on the metals, when to buy us maybe long in somewhere else. HVF method, the Hunt Volatility Funnel, helps bring that. We capture the key moments when the volatility is low and expansive, short, fast, quick moves, as you've seen on the dollar. And just as a reminder, we've been coming on with you, I don't know how long now, Patrick. Thank you. I'm really grateful that you give us the coverage. But we've had up until this point, people net dominant in the dollar until that target of 111 was run, from the 87s through the 94s. And that has been incredibly powerful. You've seen what that's done on the USD JPY, the dollar against most currencies. And now we're having our first rest. And now it's a question of waiting for the dust to settle after this, grab a new trade. You can engage with us. Prepare for reset. It's going to be huge opportunities to build wealth. Unfortunately, those that understand the game are the people that are going to get wealthy. Those that are working are going to get debased by inflation, taxation, direct taxation, high energy costs. And my assessment is that it's going to be an impoverishing era for many to ensure that they can shoehorn in their agenda. However, you can be one of those that actually gains immensely. And you do that by joining our community at themarketsniper.com.
Okay, is there a way they can follow you on social media as well?
Absolutely. YouTube channel, themarketsniper.com. And if you're still engaged in crypto, we will still have coverage on crypto, thecrypto.com as well. And we're on Twitter on the Market Sniper as well, where we follow and we comment on various things and we occasionally share charts. But the community served first every time.
All right, Francis Hunt, the Market Sniper. I appreciate your honesty. I think everyone will appreciate your honesty and your insight with what's been going on. And I do hope we can do this again real soon.
Absolute pleasure. Thank you for asking me.
That was the Market Sniper, Francis Hunt, sharing his views on the economy, FTX, and gold and silver. To follow Francis's work, please visit him at themarketsniper.com. If you like this video, please do subscribe, share, and give it a thumbs up to let the algos know you'd like to see more content like this. Audio-only versions of this interview can be found on iTunes and Spotify.